Did you know that one of the most popular board games might secretly be a financial masterclass? I'm talking about Monopoly, the game where families argue over boardwalk, but it's not just entertainment. It's actually packed with the real-world wealth lessons on cash flow, investing, risk, and negotiation. And if you ignore these lessons in real life, you are basically playing the money game blind. So by the end of this video, you will exactly know how Monopoly's rules mirror the rules of building real wealth, and trust me, it will change the way you think about money forever. Let's go! Number 1. The importance of cash flow, surviving and thriving. In Monopoly, running out of cash is game over. You need money for properties, rent, and upgrades. Without it, even the best portfolio crumbles. In real life, the same principle applies. As of 2025, 57% of Americans report living paycheck to paycheck. That means that over half of us are unprotected to even a small financial setback. And even more striking, only 41% could cover a $1,000 emergency from savings, and 42% don't have any emergency fund at all. That means that one unexpected expense, a medical bill or car repair, and you are in financial trouble. Cash flow isn't glamorous, but it's the foundation of both the game and real wealth. Number 2. The power of investments, turning properties into assets. A single property in Monopoly doesn't change the game, but build houses or hotels and suddenly opponents can't afford to land there. That's how wealth works in real life as well. According to the National Association of Retailers, median US home prices rose around 10% in 2021, while the stock market has historically averaged 7% annual returns after inflation. Assets multiply wealth. Just like Monopoly's rent can jump from $50 to $2,000, your real-world assets can explode in value when you reinvest consistently. The third one, risk management, surviving the setbacks. Monopoly has risk backed in. Land on the wrong property and it can wipe you out unless you've managed your cash and holdings wisely. In real life, risk is unavoidable too. But the problem is that 60% of investors fail to diversify. According to the NerdWallet, 65% of investors say diversification is the best way to protect wealth during downturns. So spread your risks, and a single setback won't bankrupt you, in the game or in real life. Number 4. Diversification. So don't put all eggs in one basket. If you put everything in one color group in Monopoly, you are in trouble the second someone else builds elsewhere. In real life, diversification works the same way. Fidelity reports that diversified portfolios outperform consistently concentrated portfolios. The S&P 500 has returned about 10% annually over the last century, while single asset bets are far more volatile. So balance wins in Monopoly and in markets. Number 5. Debt and leverage, a double-edged sword. Mortgaging in Monopoly can keep you alive for a short-term period, but overdo it and you lose the ability to generate income. In real life, it's the same. Debt can be powerful if used wisely, like mortgages or business loans. But Fed reports that average American household owes $145,000 in total debt, and high-interest credit card balances can destroy financial health. So use leverage for assets, not liabilities. Number 6. Strategic planning, timing your move. In Monopoly, building too early can drain your cash. The best players wait to the right time to strike, making smart trades and upgrades when opportunity comes. Wealthy individuals think the same way. A CNBC survey found that 71% of millionaires follow a financial plan. Another Wells Fargo study revealed that 80% of millionaires actively engage in financial planning. So the lesson that we can take is don't rush, plan your moves and execute with timing. Number 7. Patience. The long game always wins. Impatience destroys monopoly players and investors. Morningstar found that investors who stayed in the S&P 500 from 2009 until 2019 earned 13.6% annually, compared to just 6.2% for those who tried to time the market. Wealth is built slowly but steadily. Monopoly teaches patience, and so does the market. Number 8. Negotiation and deal-making. Trading properties is one of the most important monopoly skills. The best players don't just roll the dice, they negotiate. In real life, negotiation is wealth. Yet, according to Glassdoor, 70% of people don't negotiate their salary offers. Over a lifetime, that's leaving hundreds of thousands of dollars on the table. A Harvard study shows that skilled negotiators can increase wealth by 20 to 30% across their career. Just like in Monopoly, deals drive success. Number 9. Losses and recovery. Bouncing back stronger. No one plays Monopoly without setbacks. You will land on hotels, you will lose money. The winners are those who bounce back. Mortgaging, trading, and staying in the game. Real life is no different. The National Endowment for Financial Education found that 40% of Americans lack emergency savings. Recovery comes from preparation, emergency funds, adaptability, and resilience. Just like in the game, quitting early guarantees loss, but bouncing back gives you a chance to win. And if you want even more financial lessons, you can download my ebook. Check the first link in the description, or you can scan this QR code if you are watching on TV. So the truth is that Monopoly isn't just a game, it's a simulation of money, teaching us about cash flows, assets, risks, and patience. If you take these lessons seriously, you won't just win the game tonight, you will win in real life. Start small, master one principle, and build from there. And if you enjoyed this video, roll the dice on this one.